If you are broke, my challenge to you is don't entertain yourself. Educate yourself. Do you realize if you're struggling financially right now, you're struggling financially because there's some truth about finance that you don't know. And if that's the primary reason, by the way, it is. There's a level of you have a level of awareness in an arena where awareness is necessary, and until you develop that awareness, you're not going to be financially free. So how much time, effort, and energy do you want to put into finding the thing that's missing in your mind financially? Because if you're struggling financially, you're not struggling financially because you don't have any money. If you're broke, you're not broke because you don't have any money. You don't have any money because you're broke. What does that mean? Like the truth has been broken off from your mind when it comes to something money. I know, because it was true for me. I lacked awareness. All transformation begins with awareness.
Yo, shake my hand, and welcome to another War Room. This is War Room 95, if I'm not mistaken. That means I've given you guys 95 War Rooms in my lifetime, right? Over the last few years, where I give you buy and sell signals on a week-to-week basis on Forex, all currencies, really, indices, commodity market. There's really not anything that we don't get into. Stock market, if there's ever time. And also I give you guys clear market analysis, macro fundamental analysis, and I teach you how to put all these things together in a very well-based correlated market together with my trader's edge, which is really supply and demand, but looking at very big higher time frames that guide our everyday trends as we follow institutional order flows in and out of the markets, right? If that's good to you and you like that kind of stuff, shake my hand and let's get into it, right? So, I will say, if you haven't watched War Room 94, it's very important you watch it first, because all the assets I deal with in War Room 94, I won't touch today because of time, number one. Number two, most of the War Rooms in the month of February are going to be very long because I have to build context under every single asset. I don't want anyone to say they were confused, didn't know, etc., etc. I want to be very clear in my pedagogy this year. I want to make sure that I'm doing a very good job at clarifying and making the complex simple, right? And then making the simple practical. And practicality for us is profits. We need to get those pips, but we need to understand how to get them, right? So War Room 95, I'm going to continue from War Room 94, where we stopped looking at new assets that are not on that list. So please check that out. On Thursdays on the channel, I'll be dropping 365 Crypto, Think, Trade, Invest, and Grow Rich episode 2. In episode 1, I taught you how to build a defensive portfolio. I taught you when Bitcoin is going to peak. I taught you how to calculate that. I taught you when altcoin season is going to start. Doesn't matter what you see in the headlines moving forward. I've done my part. I've kind of like given you my macro analysis. If you've been around this channel for a long time, you will know that there's an 80% chance that the stuff that I'm using is highly more accurate, right? And all you have to do is just be patient and let these trades play out the way they need to be. Why? Because while markets are random in the sense of retail trader engagement, what retail traders do is random. We are not random in the sense that we want to follow identically what market makers are doing, what institutions are doing, what banks are doing, because the markets are controlled by economic cycles and institutions, and the money behind the institutions is what moves price up or down. Tracking that means that the markets stop being random. According to this perception, they actually become very predictable because the human beings controlling the markets, the banks, the central banks, the policies behind those banks, hedge funds, etc. Those human beings are very predictable, making markets readable, ensuring that we can become profitable, right? So if you like all that good stuff, don't forget to subscribe, share this video with someone you like, right? Because this could actually change, their lives or their perceptions, right? So I really want to start differently today, even though I am kind of like anxious of time, but I really think it's important. Full disclaimer, I wanted to do a video like this last year, and I just never got around to it. And I have to put this in one of my war rooms because I might never talk about this again. But a lot of you in the one-on-ones that I've had last week, with a few of you who booked for one-on-ones, I'm really picking up that there's some things that need to be ironed out about money. And trading is the one job you don't want to do if you have a terrible relationship with money. Trading just exacerbates things, right? So it can exacerbate your weaknesses with money, or it can help grow if you have a very good relationship with money, right? So I really want to just start from there today. And if you don't know how this is linked to trading, I would encourage you to stick around, right? If you want to think how I think, see how the markets, how I see them, hit the link down below for our course, and then hit that button, then just start the course, right? All that stuff is ready for you. All my lectures are there, walking you throughout my strategy, right? But let's just iron out a few things for the next 10 minutes before we get into these signals, so to speak. This is more important. What I'm about to show you right now is 10 times more important than whether I think gold is going to go up or down, right? Gold going up or down isn't going to change your bank balance going up or down if you don't have a plan. If you're a trader and you don't have a plan. Now, I did this for myself in 2012. And the only reason why I did it in 2012 was because somebody loved me enough to force me to think this way. And that was my dad. Like, I grew up with a really good dad. I watched my dad struggle. I used to stay in a one-bedroom flat. There's nothing that anyone can tell me. There's nothing that anyone can tell me about money, how money is bad or good or whatever. Money is an instrument, it's a tool. How you use it is up to you. But I've been on both sides of the stick, right? As the firstborn in my family, I saw my parents' rags to riches journey, right? So my old man didn't have higher education. So he did up to high school, but he didn't go to university like all these other 4 kids that me and my siblings, he put us through, or at least ensured that we definitely value education. But I watched him build a library, man. My first time touching Think and Grow Rich by Napoleon Hill, I was 10 years old. It was my dad's copy. I was playing with it while he was reading that stuff. All right. So when I say there's a lot of information out there in the world that you just have to sit down and download, I really mean that, right? Read a lot, travel, read a lot, travel, read a lot, travel, and watch your perceptions change, right? But I did the math and I realized that we only have 45 weekends left until December. And December, I'm not including December because there's a high chance I might not be available to make content. I'll have shut down for the year. I've noticed over the last 3 years, me and my family, we really prefer 1st of December, we're done. We just close laptops, we're done. So me and you have a contract until the 30th of November. I have to produce premium, high quality content on this YouTube channel for you to make you a better trader or investor. You just have to subscribe, like, but also pay attention, right? So those are the 3 things you need to do. And between now and November, it's 45 weekends. That's 45 traders' war rooms, from war room 95 to about war room 130 something. Every year, our kids make us sick. So it could be random. It could be in April or June or July. Like some random flu happens and I'm knocked out for about 2 weeks. So out of those 45 weekends, let's remove 3 weekends to say, man, I was sick or I lost my voice. God knows what's going to happen this year. All right. So that drops us to about 40 to 42 war rooms together. That means we only have, right, 40 videos in terms of war room signals to grow your portfolio, to grow your P&L, to change your trading life. That's not enough time. That's why I'm saying if you really think it's worth it, right? If this is good enough for you on YouTube, the course is better, okay? Because you need more contact with this information, number 1. But number 2, we have to make sure we make war rooms count. We really have to. So please do subscribe and pay attention, right? So don't forget Thursdays, 365 Trading Crypto, episode 2 is going to drop, right? So now with all that type of pressure, right, and the amount of teaching that I have to do, I really feel like it's important that we really start the year with this stuff. So I'm going to quickly switch over to my whiteboard. This is the one time I'm going to ask you to pay it and come back to this video multiple times until it scares you. I really want this to scare you. I want this to keep you up at night. It is absolutely crucial that this actually drives you crazy, because it did for me. Well, in 2012, just before I graduated from my first degree, and my dad asked me, have you mapped it out yet? Have you mapped it out yet? And I'll show you what he meant I should map out. And I think we should all have this mapped out somewhere in our lives. If you don't have a framework, because then what are you working for? What are you working towards? Right. So let's operate on a couple of bases. Number one, there's a high chance that capitalism is not going anywhere, at least in this lifetime, right? While we may struggle to end inequality and poverty in the world, there's a high chance that, the system that is capitalism, that's driving every single other system in our lives, is here to stay. Because of that, most of us are in big trouble, right? Financially, most of us are in big trouble. So in 2012, the statistics were slightly different. So I had to then sit down today before I press record to find the stats that are relevant to you guys now, right? So these in front of you on the whiteboard right now, this is what's relevant to you guys now. Let me just make this font size a little bit bigger, and hopefully you can see this on your screen, right? So this is exactly what's happening now in the world. As of 2024, do this exercise for yourself. You will thank me and my dad later, right? 2024, the global average life expectancy rate is 73 years old. Now, remember, global means this is around the world, and it's both male and female. It's an average, right? So if you've got a grandma who's 85 years old, long live Coco, but I'm simply saying that on average, most people die at the age of 73. So this is due to natural causes. So if you don't get hit by a car, get hit by a plane, get struck by lightning, don't get AIDS, that kind of stuff. Average life expectancy for a human being in the world is 73 years old. It's quite crazy. If you think about the fact that there are people who are running for president at 72, 73, that's quite crazy, right? Because you're already knocking on heaven's door, right? And then the average globally, females is 76. So now when you break them up individually, male and female, 76, and for a man, it's 70. And this will vary from region to country, but globally speaking, that's what you're looking at. That's globally speaking, that's what you're looking at. You're looking at the 73 gap. And then I thought, okay, this is interesting. What's the range between the highest and lowest? And I saw that West Europe, has the highest life expectancy. So you're looking at countries like Sweden, Switzerland, those places there, 82%. And the lowest globally is West Africa, with a life expectancy of 58 years old, right? 58 years old, right? And then I look deeper now into where I am, because I'm going to use myself as an example. Granted, I did this for myself in 2012. And I was so lucky, serendipity, a lot of things aligned. Bitcoin was, released in 2012. I wasn't part of the very early adopters. I was asleep. I really was asleep when Bitcoin was popping in 2012, 13, 14. I wasn't sure. I was still learning how to trade. I was still trying to be profitable. In fact, in 2012, I was messing around with binary options. I didn't even know that, by then it was binomo and options trading platforms that those brokers were manipulating. I didn't know any of that stuff, right? But trust me, after the first Bitcoin crash, in 2027, 2028, my eyes were open. My eyes of understanding through mature comprehension, logical interpretation. I knew what to do in line with this. All right. So this is not about crypto, but I'm just saying I was smart enough to use that as a vehicle. Okay. And my trading was getting better and better. And Ethereum was like 200 rands, 300 rands per token back then. But anyways, each to their own. Now, the average life expectancy in South Africa right now, as of 2024, is 67 years, where I am. And if we break that down, for women, it's about 71 years. And for men, it's about 64 years. This is the exercise I need you to do. Understand that if you do this for yourself, this is the beginning of mapping out a real vision for yourself. Now, where's the eraser? See, I get excited and I just start drawing things. Then I don't even know how to remove them. I should have done a test on this whiteboard. Right, so let's just delete everything. Give me a second. I'm with you. This is always a perfect time. Whenever I have technical glitches or I get confused across my screens, perfect time to subscribe if you haven't. Perfect time to like. If you like the imperfections, can you imagine what the perfection parts of my videos will do for you? Right, so let's start again. Now, this is what I would suggest you do for yourself. So I'm going to use myself as an example. I'm gonna pretend I haven't done this before. So starting together in 2025, I can start a whole portfolio and we do it live. Actually, wouldn't that be fun? I'm 34 years old right now. And I've just told you that the life expectancy for a male in South Africa is 64.6. So let's make it 65 years. So I've just crossed over. Is that big enough? Can you see this? I hope you can. I've just crossed over 50% of my life expectancy, right? Which is 34, half of 60, 65, 64, somewhere there, right? So half of 70 is 35 years. So I'm almost 50% across my lifeline, right? So I've got 30-something more years to live, put it that way, according to the stats. Yes, if I don't consume alcohol, which I don't, if I don't smoke, if I don't get cancer, if I don't get hit by a car, if I don't drink and drive, which I don't, all those things, if all those things don't affect me and cut my life short, statistically speaking, a man my age should get ready to die at the age of 65, which is unfair and scary, right? Given the strides we've done, financially. You need to know how much time you have left. You need to know this. This thing will shake how you move, man. If I know that I have 30 more years left to live, and for example, and this is not to shame anyone. So let's say you're in a career job. My partner, she's in a career-driven job. She's in academia. In fact, we're both researchers. That's why this channel is always filled with a lot of information, because I use all my skills to bring cutting edge. I'm an accredited published researcher from originally Rhodes University. I'm not yet sure this year which university I'll attach myself to, but for the last 12 years of my life, I've been affiliated with Rhodes University, and my stuff is Googleable. Facts. Right. So we use research. Now, let's use my partner quickly as an example. She works for the university. She gets a PhD very soon. Then she's going to become a senior lecturer. Then she's going to become a professor. And that's what we call tenure. That's a career. Tenures and careers all have an end date where the university will put you down and say, hey, you have done so well. You have increased knowledge in the world. You are an incredible, valuable member of society, etc., etc. We thank you for your contribution, but by the age of 60 to 65, they will ask her to retire. By the age of 60 to 65 is retirement for most jobs across the world, all right? According to whether it's Labor Relations Act, whether it's just you're too old to function, where it's now time to go rest. And there's an assumption in your life that you spent your life wise. You spent your life like the ants who accumulate during the summer, because one day winter will come in their lives and they'll have resources. That means you spent your life saving and investing, because when you retire, you lose your source of income and you live off your savings and investments, which means from the age of 65, she can expect that switch in her life if she sticks with her career. But I just showed you that statistically speaking, most of us are due to die at the age of beginning to retire. That's brutal, bro. That is no way to live. Right. Now, I'm going somewhere with this, and I don't mind taking time, because this will change how you trade. It will change how you invest, and my God, it will change how you see money. I did this in 2012. Now, you need to figure out how much time you have left. In statistics, I'm not saying you're going to die at 65. I, statistically speaking, have 30-something years left where no one will be coming to give me money, right? So if I had a full-time job, if I worked for someone, where no one will be coming to give me a salary, I have 30-something years left. Maybe you're watching my video today and you're 23. Maybe you're 44. I don't know how old you are. Maybe you're 35. Figure out how much time you have left. Why? The way this game is played, and I'm not talking about trading right now, I'm talking about the game of money. The game of money is played by the doubles game. It's as simple as that. It is a doubles game. Whatever you have to be able to double. We can go into my favorite book in the whole world that preaches wealth, wisdoms, done nicely without being corrupt, without being a crook, without stealing from someone. The best Bible, the book, with the most wealth-driven information that you can then find correlations in other wealth books, from Hill to the Freemason books, whatever book you read, most of these principles are originally written in the Bible, right? So I'm not trying to preach at you. I'm just saying it's there. The doubles game is there. It's in the parable of this rich guy who has 3 servants, and he says, look, man, I'm going to give you 1 talent. Talent, think of it as a currency. I'm going to give you $1. So he gives one servant $1. He gives another servant $5, etc., or 3 or whatever. All right. And he tells them, I'm going away. I'm your boss. I'm going away. As I go away, go make a plan. Go double this stuff. Right. It's a simple thing. But there's an increment principle in there, and it's called the Matthew principle. I normally at the beginning of the year, if you follow me on Facebook, I'll post about the Matthew principle every January. I won't tell you about New Year's resolutions. I won't tell you about nothing. I'll simply tell you about the Matthew principle. The Matthew principle is fundamentally the scariest thing that keeps me up at night. It's insanely scary. And I apologize. This is how our videos become too long. But can I please show you the Matthew principle? If I show you the Matthew principle, I'll just shut up. I'll shut up. I won't even come back to this whole doubling thing. But this is important, right? So this is my Facebook page. Following me on Facebook is a waste of your time. I just post. I never post anything serious there. So don't even stress about it. But please do subscribe to our YouTube channel if you want. But yeah, this is the Matthew principle, and I just searched on my timeline, and I see there. Last year I posted this at the beginning of the year. I posted the Matthew principle, so I did it in January. We're going to go find it. In short, the Matthew principle, the summary is either things get good, better, best, or they get worse, worse. Largely because we duplicate ourselves in our daily life, so we are a product of our habits. That's what that meant. Anyways, 2 months into the year, and here's what King Solomon said. And I think I show you what he says. I'll open it up for you. Okay, let's just go straight to King Solomon. Right, so this is Proverbs 24, verse 10, and I found this very scary. He says, if you falter in a time of trouble, how small is your strength? Man, I wish this man was my friend. King Solomon isn't giving you a hug saying, look, man, I'm so sorry things got tough. I'm so sorry you lost your job, and then you lost your house, and then you got evicted. Oh, I'm so sorry. He's saying, if you falter, when things go wrong for you, man, how weak are you? That's insane. Literally. So my interpretation of this is life is a constant flow of struggle. Don't be weak. Don't be weak financially. I promise you. Keep pushing. I can't remember the last time in my life I prayed for stuff or things. I don't pray for stuff. I don't pray for things. I learned to get the things you need to do is you pray for capacity. So I pray to be better, to every day and everywhere becoming better and better. Capacity to carry, capacity to bear the weight, capacity to grow, to do more. My interpretation is don't be weak, don't have small strength, don't be a poor specimen. But let me teach you on the Matthew principle. So there it is, 1st of January, every year like clockwork, I posted, except for this year. The Matthew principle says, and I'm going to read slowly. Well, from the book of Matthew, the only thing that makes sense to me in this world of chaos, pain, strife, and hope, love, is one thing in the Matthew principle. I tweeted about this briefly. See, the Matthew principle was so profound, right? This is actually a real thing. Economists, remember, I'm an economic historian. So I know for a fact that in our subject, economists actually use the Matthew principle, directly taken from the Bible, right? So economists use it to make sense of the world. The principle is extracted from the following statement. I think these are Jesus' direct words in the Bible. You don't have to believe in the Bible, but it's not like me converting anyone. It's not a Christian podcast, right? But the Bible is the only book that is so well integrated into so many other things. There is no book like it. So at the very least, you must love knowledge enough to at least care what it has to say at the bare minimum. And it says, listen to this, for unto everyone that had shall be given, and ye shall have abundance. I'll read that again because I took it from the King James Version. For unto everyone that hath shall be given, and ye shall have abundance, but from him that hath not shall be taken away even that which he hath. So it's King James, and I break it down. The first time my old man tried to explain this to me, I found it so wow. So my dad tried to teach me this when I was a kid, like a teenager. The good God, the great God, the kind God in his good book says, he who already has more will be given more. Why do rich people get richer and richer? They're applying certain principles. But he who does not have any, even the very little he has, shall be taken away from him. Then I say, my 16-year-old mind into my late 20s struggled to comprehend how he was a just God. How was this fair? I noticed this principle plays out over and over in the parable of the talents. The talents, the one I just explained now, the rich guy gives 1 talent, 2 talents, and 5 talents, and so forth. Economists use the Matthew principle to describe everything about the world, specifically how capitalism works. This is why the Matthew principle found in the good book is both shocking and yet marvelously true. This is the reality of life. All right, not 2020. I was making fun of the whole 2020, whatever. The Matthew principle reality is when you start to fail in life, when things start to go wrong in life, and here in this channel, talking financially or in anything, you fail more and you fail more rapidly. You fail faster. After all, whosoever does not have, even the little that he has will be taken away from him. That's what it says. Same as when they say the rich get richer while the poor get poorer. But the other side of the Matthew principle is equally true. That is, when you start to succeed, you succeed more rapidly. So you start to scale up quite quickly. Your movements are parabolical, if you want to talk charts, or they're flash crashes, right, when you go down. So judge your life along the lines of progressive spectrum, okay? And this is really what I'm trying to drive here in today's video. I know this introduction is long and I've lost some of you already, and I apologize, but not really, because it's important, because I have to be able to say, yes, I was also with a group of people who absolutely understood exactly what I was saying, right? So we're talking about doubling, and this is so important, right? Based off what I've just shared with you, how to double your money and why that's important. And I just broke down your life expectancy, right? Right. In case you're confused, we spoke about our life expectancies. We said, look, it's a dangerous thing to think you're going to retire, but when you retire, it's actually time for you to go sleep forever, right? So wealthy people play this game in doubles. So this is your target as a trader. I'm going to set some extremely difficult targets as a trader. The only thing you should be thinking about is doubling your money in the market. And I'm not talking about risk to reward ratio. I'm talking about your net worth. You need to start creating a net worth, and you need to start doubling it. And I'm going to link that to our life expectancy problems, right? So let's say, there's a guy called Mr. Ramsey. Mr. Ramsey always comes up with these incredible things to help people get out of debt, and then when you get out of debt, how to move forward, how to create a savings, then how to invest, etc., etc. And I really find that stuff very useful. All right, so let's say you somehow can get your hands on $1,000, which is about 18,000 rands, right? And by the way, the easiest way to get $1,000 is to have $100 in a trading account, and you know what you're doing, and you simply grow that $100 nice and slowly. Whether it's your take profit is $30, one day to get to 1,000, right? 0.01 is nothing wrong with that if it matches your capital allocation. But let's say you have a job. So maybe you have a job and you're trading by the side. Fine. And you say, for the next 3 months this year, I want to save up to $1,000. My job doesn't pay much, Leroy. It'll take me 6 months. Sure, do it. Whatever it takes, get to $1,000. And I'm using this as an example. Remember, I said I'm going to use me. I said I'm going to use me from the get-go. I'm 34 years. My life expectancy is about 75. And then I said, how much time do I have left? I said, I've got 30-something years left. I have 30-something years left. If I was to get $1,000, which in my currency is about 18,000 rands, I have only one goal in my life, is to start doubling. Why do I want to double? I'm going to have to create a whole new rectangle right now. Give me a second. Okay, anytime I glitch out like this, what are you doing? You're smashing the like button. You're smashing the like button. You're not discouraged, right? There we go. Right. So, and honestly, you could do this with $100 and double it to get to 1,000, then start the process. However it works. But this is what $1,000 playing the doubling game works. And this is how people buy houses, by the way. When they use property to buy property, this is how people use the banks as leverage. This is how people can use life insurance as leverage. This game, what I'm teaching you isn't new. This is not like a hallmark research by Leroy. This is literally how wealthy people build wealth and transfer generational wealth. And when they do it because they love the generation that they leave into their children. But it's also a biblical principle. It says that a righteous man will leave an inheritance for his children's children, right? So when you play the doubles game, it will look something like this. If you give yourself 10 years to do it. If you give yourself 10 years to do it and you do it nice and slowly, it gets very hard later on in terms of amounts. But $1,000 at year one, whenever year one is 2,000, and then you start to double. So as you start to double, you realize the method principles comes into play, right? You start to grow rapidly. And in the markets, guys, we've got compound interest on our side. We've got a normal interest on our side. We can accumulate position. There are so many things that can help us achieve this goal at a much more quicker rate than 10 years. I am saying normally, nice and slow, 10 years of just doubling $1,000 by year 10, you will have $1 million. I know you're on the wrong channel. If you're here to hear about how to get Lamborghinis and Ferraris, I don't do lifestyle content. If you want to buy a helicopter with your trading stuff, good for you. I teach traders how to risk properly and to grow their capital so they never lose it. And over time, that accumulation creates wealth, real wealth, right? If you're here for flashy things, don't even subscribe. I can't help you. Don't take my course. I can't help you. Don't blow me up on WhatsApp wanting me to sit down with you so you can flip $100 to $10,000 because you're incredible debt. I cannot teach you what I haven't done. I haven't done the flashy things like that. I haven't multiplied money overnight like that. No. My stuff has always been step by step. I can only give you that, right? So I hope we're clear. Shake my hand, not being hostile, but just to save everyone on time. After 10 years, you got $1 million by doubling the first 1,000 in 365 days. Is it hard? You don't even have to trade for this. You could save in an interest. Go to Investec and say, if I give you 18,000 rands, how much interest would you give me? Compound interest in a year. They'll give you 7% or 8% or 10% above inflation. And then you split it and you find another vehicle. Maybe you buy something that will give you a safer thing. Maybe look at a unit trust by Old Mutual Bank. You play around, you keep splitting all your little monies until you get to $2,000 before the end of the year. Can you do that? Yes, you can. If you start a small side business and your goal for that business isn't to change your lifestyle, but to start to double what you have. So an e-commerce business. I'm not a business guy. Unfortunately, I don't have my father's entrepreneurial genes the way I wish I did. I just know what I know, which is this stuff. But let's say you're a pure breed trader like me. You know the markets can give you these gains easily if you do the right thing. That's $1 million by the end of the year. Why? Even if I don't get through all the assets, I'll tell you why this is important. Because at the end of the year or at the end of your 10-year spiel, and I'm going to have to delete this, so I hope you saw it. I hope you understood it. I have to move on quickly. Delete. Whiteboard Leroy is back, which means I'm teaching instead of giving out signals. When will this thing end, right? I really hope this helps you. I really hope this changes your life. It changes your perception, number one. Right. Now, $1 million or that number that I just showed you, and I'll put it up on the screen there. For those of you who are not in South Africa, but are in Africa, just convert $1,000 and $1 million to your local currency. I'm going to be talking in dollars and rands just to make it easier for my brain. If you're in Kenya, I see you guys subscribing from Kenya. Shake my hand. Kenya has always loved me, and I love you guys too. America, I see you guys as well. Africa, South Africa, I see you. Botswana, I see you. Thank you so much for subscribing. Right. So in layman's terms, after 10 years of doubling in South Africa, $1 million to be $1,024,000 at today's exchange rate is about 19 million rands. 19 million rands. You start off with 18,000 rands And after 10 years, you have 19 million rands in 10 years, if you do it right. And you can use any vehicle. I just like using trading because I can control my output. I can guarantee this. Now, like I said, I was put on game in 2012 while I was still learning how to trade. So I've long started this process for my own life and duplicated it a few more other times. But just to put you on game one more time, I'm 34 years old. My life expectancy is 65. I now know for a fact that I've got 30-something years left before I statistically have to kick the bucket. Not that I'll die at 65, but statistically speaking, that's what the math is saying. And I've just shown you that it will take me, if I was to start this with you today, I'll look for $1,000 first, find a vehicle that I trust, a verified vehicle. So you can verify it via your skill set that's taking the course in how to trade. But there are other vehicles. Maybe you could get 4 houses via a bond. Let's say you've paid off your first house and you look at the house market and it makes sense and you get a second house and you get rentals. And when you rent your house in South Africa, it's a 4-bedroom house in a good suburb. You get about 10,000 rands a month of rent. You wait for 2-3 months, you get your first $1,000. You take that $1,000, you go invest it somewhere. 2-3 months of rent in that house of yours, you take that 1,000 again, you invest it somewhere. However you want to double this money, bro, double it is what I'm trying to teach you, right? And then I said, I've got 30 years to go, da-da-da-da. Now, listen to this carefully. Statistically speaking now, according to numerous studies, especially in South Africa, if by the time you arrive at your retirement age, remember I said my partner is most likely to retire between the ages of 60 to 65. So if you retire at that age and you really lived a life that did not have too much dizziness in it financially, so you didn't get into too much debt, and whatever debt you got into, you paid off. And by the time you retire, please, you should not own a house loan, right? Because then that's just crazy, right? So you've cleared your debt. You now own a property. That means no one can say, get out of my house. You know you have a place to sleep at night that's stress-free. No one pays rent. You don't owe anyone rent. You don't owe anyone credit. And you're just retiring. Let's say you have no savings, but your books were zero. You're clear. You didn't owe car payments. What else do people get into debt for? Cell phone plans, you're clean. Statistically speaking, to live an extremely comfortable life in South Africa. In fact, South Africa is something called a retirement visa. That means other people from other countries in the world can come and retire in South Africa, get a legal visa from Home Affairs to retire. But the retirement visa has market preconditions. You must prove to the South African government by your bank balance, that's actually a good example to use here. You must prove that you can sustain your life and not be a problem in the South African economy, not go steal jobs, as they like to say about foreigners, or not go become a beggar on the street, or not go do crime because you don't have money. So to acquire a retirement, look this stuff up, fact check me, bro. You need about 37,000 rands, something like that, right? In your bank balance monthly. So it would mean, technically speaking, you need about 444,000 rands per year to retire in South Africa. So one more time, my definition of retirement is your house is paid off, your car is paid off, your debt is paid off, at least by the time you... So 37,000 rands is not too bad, all right? I mean, we all have different goals in life and money, however we could, but this is middle class. 37,000 rands to go into the type of food you want, to go on holiday, and every month you've got a guaranteed 37,000 rands. That's not going to a bank for a bond. That's living quite soft. Let's be honest. This puts us at about $24,000. You might not be able to see what I'm typing on the whiteboard. I'm not entirely sure. I'm just going to click out so you see the updated whiteboard, right? So this is where we are. Okay, this is important. It's taking time, but it's important. Now, how many years of living can I get out of that? Statistically speaking, remember, it can deviate. If I have bigger expenses, if I live in a 10-bedroom mansion or whatever, all this stuff can deviate. But I'm saying the bare minimum. Do you know the bare minimum to reproduce yourself in your class right now? What do I mean? I went to a government primary school because my father was still going up the ranks in life. And then me and him made a deal. I love books. I do well in school. He's going to take me to the best private high school, and so he's going to work hard, become the best he can be financially. I have to work hard, become the best I can be academically, and he was going to put me in a private high school, which he did. So now I know that. So I have to when I say reproduce yourself in your class, I'm part of the upper middle class-ish, I don't know, something like that. Upper middle classes, people with specialized skills and have an earning bracket of X amount, right? So there's ruling class, which is the elite, upper middle class, lower middle, missing middle, and then working class. That's the capitalist structure, so to speak. So if I want to reproduce myself into my class, it means from day one, my kids, one is 5, one is 10, must go to a private school. They must go to private school creche, must go to private school preschool, private school grade 1, private school high school. That's how you reproduce yourself, so that there is no class drop. There's a class ladder. My highest degree right now, I've got master's degrees, right? And I'm currently registered for my PhD, going back to my PhD. My partner is trying to finish her PhD. That means it's almost certain that no matter what our children want to do, they have to get a PhD now. If anything, by then, maybe they might need to get 2 PhDs. That's reproducing yourself in your class. That's part of your financial outcome, by the way. You don't just randomly, will that. So you have to build it into your plan, wherever you are in your life. Now, I don't care how much time this is taking. I have just realized that I want to do this properly and I want to do it once. I really hope the people watching this don't get bored. The market signals are coming, but this is so important. Now, 10 years from now, remember, it took 10 years to build $1 million US. If you're doubling 1,000, 2,000, 4,000, 6,000, it takes about 10 years to do that correctly. However you choose to do it. I'll always choose markets because that's my skill set. I'll always choose markets. And sometimes if you have a very good investment here in the market, if you know the crypto cycle, which is in 4 years, you could take out a lot of profit and get into property. And then all of a sudden, you've got a second thing that's helping you double your money quicker. and then you put all of that in a life insurance and you start borrowing from your life. There's a way to do this stuff. It's just, you have to open up your eyes of understanding and start to get into the research side of things. And the research question for you is, how do I make my life better financially? Right? You got to seek out wisdom. I told you in the last war room, he says, acquire wisdom, get wisdom. It's the most principal thing. Go get wise about money. Being here, shake my hand, helps you with that. Now let's break this last step down. So I know for a fact that, it's 19 million rands. It took me 10 years to get it. If I started to double, all right? So I'm set there. I know that if I want to live comfortably in the country that I'm in right now, I need about 37,000 rands per month, as long as I don't have any debt attached to that. That's 37,000 rands to just look at my partner and say, what are we doing this month? Okay, what type of grapes do you want? You only want to eat at Woolworths? 37,000 rands is really more than enough. If you're done, if you're retired and you don't have kids to raise and you're finished with university, 37K, not too bad. It's not a lot of money, but it's enough. It's enough to get you a comfortable life. Anyway, statistically speaking. And then I say that's about, give or take, it's right up there on the whiteboard. It's about 444,000 rands per year, or $24,000 per year. So you need a vehicle that's going to give you roughly $24,000 per year, all right, to get this 37K going in your life, all right? And now we are going to add the most important thing, which I put there, is where am I? So I'm 34 right now. There used to be a red dot, but I haven't taught in so long. And now I'm coming back and I see that, okay, there we go. There it is. That Zoom is updated a bit, right? So I'm 34 right now. This is my target for statistically to go to sleep forever, but let's say retirement. And I've got 30 more years to build something like this, what we're talking about. All right. I hope that's clear. Now, if that's the case, and I'm really looking to retire early, all right, so it means if I was to start this plan today, the one that I'm giving you right now, it automatically means if I was to start it today, I would be 44 years when I can start to enjoy the fruit of my labor. If, let's say, I was starting this plan now, 10 years from today, I would be 44 years old. Does that make sense? If I started to double $1,000 now, 10 years from today, I'll be 44 years old, where if I did everything correctly, I should at least have that stash minimum somewhere in whichever vehicle I chose to use. And then another way to kind of like start to think about this is, well, what would that actually mean? So let's clear this. Let's clear this. Geez, man, I hope you do this. I really hope this is not you yawning saying, when is he going to talk about markets? What's the point of talking about trading? If you can't hold your trades and you don't even know why you're trading, you don't have a bigger goal attached to it, what are we rushing for? And more importantly for me, what type of 365 trading community am I creating, right? If there's no clarity of mind, there's going to be a problem. So I'm going to put all my notes here on the whiteboard, which will actually make my thoughts flow slightly better, personally, I think, and maybe get us out of the out of the clear quickly. Now look at this. Look at the maths as I conclude on this important issue. Look at the maths. Let's make this bigger for those at the back. Justified, no, center. Right. Okay. Now, in front of you should be the final part. Now, 19,000 rands, don't forget, after 10 years, is that correct? 19 million rands, sorry. It's 19 million rands after 10 years, which is the 1 something million US dollars. When you convert it into South African currencies, 1 million whatever is 19 million rands. And then I say, I need 37,000 rands per month, which works out to be 444,000 rands per year. So if I do that today at the age of 34, that means in 10 years' time, I can start that plan. Well, 19,000 rands divided by 44,000 rands per year gives me 42 years, right? And it took 10 years of consistency to build this. So before I can eat this, so basically 19 million divided by 444 is about 42 years, right? And meaning that if I was to retire early, if I didn't want to wait until I was 65 to retire, and I said, I'm going to retire at 44, 10 years from now, I'm going to follow this silly plan that this light-skinned guy is saying I should, I'm going to try. And in 10 years' time, I hope to retire. And at 44, I start. I've bought myself 42 years of living with that money. If I have no debt, I own my own property, and that's just money to sustain myself, to go to a specialist when I need to. When they say there's the latest new green juice, I drink the green juice to cleanse my liver. When they say it's better to prolong your life by doing yoga, and you must go for a yoga retreat in Cape Town for 2 weeks, I have the money to do that, to prolong my life in the next 10 years' time. And I get this money. 19 million rands buys me 42 years, statistically speaking, and I could start that now, which means I could start the program, and gain 42. So by the time I'm 44, plus the 42 years I have here, I'll have at least statistically prolonged my life to die at 86. Most people die through stress. Stress due to marrying the wrong person or being lonely or financially. Those are the three things. Stress brings a lot of disease to you. That's my main point. But the bigger point here is if you don't know where you stack in the rat race, you are trading blindly. If you don't know how to have a bigger vision for where you're going, I see people punish their capital in such a massive trading psychology era. You punish your capital, you cancel your investments too early in crypto because you really don't know, right? For you, living large now is better than the penalty you're going to pay later on. It's quite an interesting human psychology, but I really thought I'd bring this up to you, and I hope it changes the way you have to have a 10-year plan. Get yourself a 10-year plan around this money thing because it is going to happen. You need to remember, if you are now coming now to the people who are really hardcore like me, and by hardcore, I mean you're going to be doubling your money by trading. I want to leave you with this very important line that I put in my book a long time ago. When will my book come out? When I finish going through the edits. I don't know when. I'm out of time. I'm always out of time, but it'll come out. Remember, you're trying the hardest thing in the world, trading. Trading is the hardest thing. You'd rather be an engineer than learn how to trade profitably. You're trying the hardest thing in the world. Why is it hard? Because it includes mastering yourself with a monetary reward or a monetary punishment. And it's always immediate. In trading, you know you're right or wrong immediately. When your take profit hits or your stop loss hits, that dials into your trading psychology, which dials into your self-esteem, which influences your trading emotions, FOMO, fear, excitement, euphoria, greed. All those big five trading emotions are triggered by your immediate results per trade. I know traders will open 10 trades in an hour. So imagine every trade that you make about 300,000 trades in a year. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. Per trade, you're teaching yourself something cognitively about yourself. So it's very important. It's literally trading is like playing Russian roulette, one trade at a time with your money. All right. So I hope to God this long introduction really fixes the type of approach you need to be using, right? And I know some of you are bored. So let's get into the markets, but I won't come back to this. I'm gonna tell myself I did a very good job, and I will not be coming back to this. So I really hope to God this was clear and that you're gonna practice this stuff. Please come back to this stuff at your own time. Please come back to the stuff. You really need to craft a significant plan for your own financial life, right? So let's go into Forex Factory 365. Let's kind of like have a look at what the markets have been cooking. I want to quickly do a sentimental test to see if there's anything big this coming week. If you skipped everything and this is where you want to start, shake my hand, welcome. That's also fine with me. I've done my part, man. I've done my part. Right, so this coming week, we are looking for any hot takes. And just to kind of like recap, in War Room 94, I looked at core CPI before the results came out. I predicted that it was going to be most likely hot. I taught you how to do that. And then I showed you on the lower time frames which way markets were going to work. And then markets did exactly that, then immediately reversed on the same day because of the relation between supply and demand. And then I said on Friday or Thursday, I can't remember, watch out for PPI. PPI came out hot. Yep, there we go. PPI came out hot. Why is this important? Because in Crypto 365 Trading Crypto episode 1, I said that there was thin liquidity in the market and that two things needed to happen to turn that around. We need a Powell intervention, Powell to open the floodgates and go QE. Powell will not go QE as far as I know logically if inflation is still hot like this. It's still hot. It's going up. We want the inflation to be 2%, below 2%. No. It's now 3%, my bro. It's going up, right? Look at inflation. It just shot higher and higher. And I said this to you guys last year, that inflation is not something they're going to kill over time. This is a beast, bro. In fact, once you get into this inflation hot zone, right, you really are fighting against recession and stagflation. Your fight isn't even to reduce inflation, right? But mainstream economists won't say that to the public, right? But we know, we look at the data month over month, right? So the next big report is NFP, and there'll be another CPI report before Powell talks to us in March. But let's focus on the week ahead, just to see if this week is going to be too crazy, right? And then I said the other option, if Powell doesn't give us QE in the market, is Trump. We need Trump to say something. We need Trump to do something. And this past week, Trump was on a long call with Russia, so it's reported. And the rumor is, and everything during the Trump administration is a rumor until it's absolutely proven true. Don't stake your trading account on a bunch of tweets, bro. It will blow. It will, ma'am, don't do it. It will blow. Fact check it, wait for it to happen, then trade. It's okay, guys. For our trading strategy, it's absolutely fine for things to first happen. They create their order values, market moves, and then we wait for price to nicely go back to those areas of it. It's okay. We don't have to be on top of it immediately. We don't have to guess left or right. Our trading strategy, my module one, I'm not even going to go show you. It's there if you want to see it. It's a module 1 relies on waiting for the banks to move first. Simon says, let them move first, then we copy. Right. So this week, Monday, nothing. Tuesday, hot. What's hot? Yeah. AUD is hot. Monetary policy stuff, same thing. If you trade that stuff, good for you. I'm not really that interested. CAD, I'm going to be following CAD a bit because I know it's in the range. It's within the sniping scope of Trump right now with his tariffs, right? So that's so look out for CAD, but we'll look at USD CAD, and I'm pretty sure USD CAD is still to fall a little bit. So we can maybe use that chart to predict how that's going to go. AUD, again, NZD on Wednesday, not much. CPI annually for the pound. I'll look into that because I'm a London sessions trader. I like to trade in the mornings anyway, so that's quite interesting. So CPI for pound is going to be fun to trade this week. So look out for pound pairs. And you know the drill, man. You know the drill. I've told you guys on this stuff. If you're not, just go back to the recap on mod 1. FOMC minutes, I will read them, and then maybe in War Room 96, I'll tell you what was said. Okay, I'll give you guys a summary of that kind of stuff. At some point, I'm not gonna stop. I can see I didn't charge the battery for my camera, so I won't stop the War Room. I'm just gonna keep going. Once my camera kicks me out, we're just gonna have a cameraless War Room. Right, and then unemployment claims, that's for my team to calculate, help us calculate what's gonna happen in NFP. And then on Friday, a lot of Euro news. So that's going to be fun to trade for retail. Right. So, just it's no more volatility, nothing too crazy. And then we're going to quickly read the tape. Do you guys read the tape? I keep telling you to read the tape. Please read the tape. Forex Live. You go to forexlive.com to read the tape. Learn to predict some stuff. So these guys have already started putting this out before the markets even opened this Sunday. Right. News quick, a week ahead. Reserve Bank of Australia. I just showed you that stuff. And I was like, I don't care. Because for me, it's not stuff I like to trade, right? But for them, everything is a big deal. So this is Reserve Bank of New Zealand monetary policy statement. There are Jerome Powells in every country, and there are Jerome Powells will be talking. So it will be Australia, it will be New Zealand, the FOMC minutes, PMIs, Canada, UK. Click here and go read. See what's hot in your currencies. Learn. This is the job, man. Do the job. The job is knowing what's happening so you can better trade, right? Retail sales show consumer weakness in the start of the year. That's fine, but we know inflation is high. S&P 500 misses on a record close. Nasdaq closes higher. So indices closed higher this past week. I actually thought they were going to sell off on Friday, by the way, until Trump did the Russian thing. Right, so you see how markets are fickle. Volatility will change every second. Logan, right? He's one of the voting people who vote between rates should go high or not. Fed Logan, if you see the name Fed, he's part of Powell's team. Next couple of months, inflation will be pretty important. Duh, right? You see what I'm saying? They're already preparing the market. This is a market signal. So if you're on Wall Street and if one of the Fed says this, if Logan pops up and says, look, voting in 26, so on the 26 days, on the 26th of March, I can't remember. If she's saying, look, man, the next couple of points of inflation will be pretty important. Which ones are they? We'll have NFP. Inside is the wage increase. That's an inflation data. We're going to have a CPI report, right? So even if, listen to this, even if we get better data on inflation, should be cautious on rates. So even if CPI comes a little bit lower, the Fed is still cautious because inflation just spiked up. If labor market stays strong, that's your NFP. Better inflation data doesn't necessarily mean Fed can cut the rates. It's all here. You don't even need me, bro. Read the tape. It's all here. Also focus on geopolitical and policy changes. That's Trump. Tariffs, trade wars. Well, and then what else? There's a lot of optimism amongst Texas banks on loan on demand economic growth. Don't worry about that stuff, but you should get to know it. Critically important that every bank is set up to use the Fed's discount window. Still are some banks that are not signed up to this stuff. Some of the increase in longer term rates came from expectations from strong economic growth. Expectation for Fed policy rate will stay high for longer. The Fed ain't cutting rates. And this is coming from one of the Fed members. All right. Right now, finally, the focus is restoring 2% inflation. Wait a minute. Where is the inflation? One more time. Last week, inflation is at about 3%. Let's go to CPI. Wednesday, 3%. So they have a lot of work to do to get to that 2%, right? So read the tape, right? So all that I think for now, that's more than enough. I kind of like have a good sense of this is called market sentiment. I now know, right, in the markets is how we're starting the week. The sentiment will change purely only because of Trump. But right now, overall, this is the overall sentiment, right? And it's absolutely important to remember this. Markets are not random. Central bank policies, economic cycles, global events, and a truckload of money that the institutions drive in is what moves price between supply and demand, right? And that's all we do. That's all we do, right? So let's get started, right? And I can see, like I said, my camera is going to go kaput. So let's just pull up the charts right now, and then we are happy. So if my camera goes kaput, it's not a big deal. Lovely you seeing you, or you seeing me see you. Right, so I've got USD ZAR there. I don't think we're going to start with USD ZAR. We're probably going to start with something else. I want to kind of like plan this in a very logical way. Right, so maybe let me explain a couple of things first. Yes, and while explaining it, let's go to the dollar, because that's our money maker. Oh, making babies with those supplies. Right, that's interesting. Okay, a lot to say about the dollar. It might be time for me to start getting back into the game, right? I've been a dollar buyer for months and months and months. These supplies, depending on how strong they are, might push me back into buying, or eventually change me into wanting to start to sell the DXY. But let's set the scene, because I didn't talk about this in War Room 94. At least when my battery dies for my camera, you won't get to see me drink like that. But it'll be awkward because you won't know why I'm silent. Right, so there are a couple of things, man. There are a couple of things about the dollar. Number one, remember we used the dollar before many times to predict US elections, right? And you can backtest that. I've said that many times. But number two, the dollar has been on a rising wedge window from the first crash of 2008. These time frames and timelines are very significant. We're making a steady recovery back to the original supply of the early 2000s, which was the tech bubble, boom, explosion, right? Back then when IBS was the new thing, right? Tech bubble, the first internet tech bubble happened, and we're making our way there. We're nowhere close to that area. I'll delete this Fibonacci, but we're making our way there, right? We've made contact with the governing supply on the DXY. So, you know, if you haven't done the course, I can't help you, bro, but like, supply and demand works all the time, right? All the time. Okay, so when you get to a supply, you have to sell, the sell-off time. But we need to see how much of selling is going to happen. Okay, but more importantly, when I did this chart for you guys, when I was showing you how to predict the elections, we know that Republicans use supplies when they enter into power, and they use supplies to keep the dollar low, and Democrats use demands when they enter into power, and they push the dollar high. And that actually has ripple effects to what it will do to their economy. When you're thinking about trading, right, the stronger your currency is, has impact to your trade partners. The weaker your currency is, also has impact to your trade partners. The Japanese yen for a very long time has kept their currency weak for a reason. It's cheaper to do business there. So, buying things in yen, weak, good. A strong dollar has a different outlook. So I'll quickly teach on that for 2 minutes. All right. But this is a very, very important. So now we've got Trump. Trump, the man who's driving tariffs, the man who's trying to start trade wars left, right, and center, or at the very least, trying to scare the world in that particular way, right? And those trade wars and using the dollar in that particular way drives markets in a very specific way. But another way of explaining this, if I can phrase it properly, is that a weaker dollar would mean it is cheaper to manufacture and do business inside of the United States. So whenever Republicans come, I went back to 1980 for this one, but in terms of supply and demand with presidents, I went back all the way to the beginning of the charts. But whenever Republicans come, it's always make America great again. They do not use that phrase. Now, I think that's more of a Trump campaign phrase, but that's always the mindset. How do we boost manufacturing in America on the ground? Not like Nike or Apple, where their factories are in China, so they create things cheaper. China using Africa to create in African countries cheaper and then export out to the world. Republicans' macroeconomic game. Why? If you don't know this, you don't know the game you're playing, right? You have to know this. Because then how are you going to know what the institutions are doing? They're doing what they're doing, what they said they were going to do in their macro policy, which they said they were going to do in their campaign. These guys are literally looking at you in the face and saying, I'm going to do it. And then they go do it. And then you go sell the wrong assets. Right? So it's important I break this down. So a weaker dollar, why Republicans always make contact with suppliers and push price down, is a weaker dollar would mean it's cheaper to manufacture and do business inside of the United States. So foreign direct investment comes into America versus a foreign direct investment going, for example, to China or to India to set up a factory there. It is, they want to, because when people do business in your country, they bring their money in your country, they invest inside your country, your jobs, your unemployment rate in your country goes down, you start to create more jobs, more products, etc., etc. But to do that, it must be cheaper to do that. So you have to have a weaker currency to do that. Right. Now, Wall Street consensus right now is a strong dollar is what's happening. And we can see it, since Trump came into power, say about November, somewhere here, this big green candle right there. Let me just put an arrow for you guys. After this, I promise you, I won't even stop to teach. I'm just going to fly through charts just to make up for time. Right. But you can see here with a bullish engulfing pattern and the camera is gone. Camera is gone, but I'm sure you can hear the sound of my voice. I pray you can. Right. So you can see here, let me just switch this off. Right, the right there is November, and the next candle there is the election, and price starts to pump up. And the nice part about this was the Wall Street consensus was right now that a strong dollar is going to be based on tariffs. So the more you threaten tariffs, the more Trump was trying to strengthen the dollar. But every bluff that he makes and changes his mind, then the weakness will start to cripple in. Not forgetting that when that weakness started to cripple in, we had made contact with the supply. So what's the macro game right now? This is what we should all keep a lookout on when we're reading the tape for the next 6 months to a year. The long-term game in Trump's 4-year term is you want to see China. You want to start to see headlines where China somewhere agrees to some tariffs. Right now, I'm pretty sure China is not agreeing to anything right now. But you want to get to a place where China, at some point, I mean, I could be wrong. Let's quickly have a look. I used to have CNBC here. No. Okay, let's try this. This is now just me double checking myself. But you really want to see something like this. I promise you. Looking out for this in the long run is going to help you, right? So I'm going to share screen 3 for a second. We're back here, right? Let's see what it'll show us. I'm pretty sure right now China is fighting back. Right now, geopolitical comments, China's yin says that tariffs produce no winners. This was on Valentine's Day. Valentine is coming. Where's your boyfriend? China says China tariffs on US have gone into effect. China has imposed tariffs. This was 10 February. That's not what we're looking for. China exporters to step up offshoring to beat Trump's tariffs. They're adjusting their economy to what Trump is doing. So China right now is engaged in the war, right? China consumer price inflation picked up. That's fine. China says we'll place greater emphasis on boosting consumption. We'll find a way for people to buy our products around the world. That's what boosting consumption means. All right. So one day we want to come to a place like this and we want to see different headlines sometime in 2025. Write this down somewhere because I don't know when it's going to happen. And what you want to start to see is to China to agree on some tariffs, to start to negotiate, to start to say, we finally sat down with Donald Trump and we're seeing eye to eye. We'll agree that they tax us a lot on 1, 2, 3 products, but in return, we will give concession to 1, 2, 3, and we'll also tax the United States on 1, 2, 3, but in return, we'll give them a discount on 1, 2, 3. Once China starts to agree, right, and in turn, US dollar starts to weaken, we can then expect to see the US get to export more. America, at the end of the day, Trump's long-term goal, according to macro policy, is to export more. He starts off in his first term of presidency, he was doing this is the exact same playbook, but people get caught up in the stupid headlines and in the drama and they miss the bigger plays. All right. So with a dollar, and now I'm getting to charts, supply is a play. All right. So for now, we really should be out of any longs, right? I'm not in any longs right now, and I really wish I had been in some sells, right? So we've got a clean supply here, and let's break this chart down properly, war room style. War room style. Let's go on the monthly time frame. So in the governing time frame, we definitely have a beautiful imbalance. This is a fresh touch, so I don't expect price to go away for too long, right? We must come back soon for a retest. On the weekly time frame, our mayoral time frame is looking good, but it's broken, right? So I will remove this zone on the daily after I show it to you. This is our first line of defense for the dollar. And normally a weekly demand will send price back, especially if price needs to give us a retest. Normally, 365 traders who've done the course, if you understand what I'm saying, I want to repeat that for you. A mayoral demand will normally send price back to a governing supply to give you the retest that you're looking for. So watch out for this. And then, sorry, let's make that big again. I clicked something, so I just want to make sure you guys are seeing the right skin, right? So yeah, still my screen. Right, so on the daily time frame, and that's where I like to get busy, all right? We can see that our daily area of value was broken here, and thank God I chose not to buy. I really wanted to, very tempted, right? But you can see, right? So what you always want to start looking out for is the indications. There's a little bit of that module thing that one day you'll get, right? When price starts to remove some lows, right, then you know, oh, okay, they're serious, right? But once price removes the demand, we know that a better play is on hand. So to be honest with you, if I want to buy, I'm going to try and risk money to buy it down here, but I'll be very cautious about how far I buy up. And if I want to sell, I'm going to have to wait for a retrace, it seems. A retrace that I may or may not get anytime soon, right? A retrace that I may or may not get anytime soon. Right, so I was just cleaning up my charts there, right? So let's have a look here, right? So Hakini Hashi is not too clear. Yes, we could use a 50% body. I teach you guys this stuff in the second, in my module 2 in the course. Let's go to and this is the daily. Let's go to normal candlesticks. It's risky, but yeah, you could look for a play there, probably H4. Yeah, I thought so. I thought there'd be clearer order blocks in H4. So I would love to see price really beyond this point here. I'd love to see price break above here, though I'm not selling here. There's no ways I'm selling there. There's just no ways in hell. Why? Because I prefer premium sells, right? So the higher I go, the better, right? So we could also call upon anti-Fibonacci on the H4 time frame, and then you realize why, right? So there we go. So you see from swing high to swing low on the H4 time frame, my golden ratio is already pointing at this order block. Retail trader 50% mark is pointing at this 50% body candle with a bearish engulfing pattern. So this is my zone. So I would rather sell there. If I was going to risk any money to sell, it would be here. My stop loss, it's not a negotiation. Stop loss is not a negotiation. I'm not talking about having a stop loss. I'm talking about having a stop loss, but also where you place it, right? What's the point of running a trade if you're scared is price going to hit your stop loss? If you're scared price is going to hit your stop loss, you have not conquered trading psychology, because trading psychology will demand that you accept the risk you're taking, demand that you know for a fact, you could lose money. And then when you make peace with that, can you then surely accept the risk and take the trade, right? So that's what I'm looking at right now, this type of movement. And to be really fair with you, if I was taking the trade wholeheartedly, my stop loss would be there, and my area of entry would be somewhere here like that. It's very dangerous not to use a daily time frame, right? So it's not as pretty as it looked on H4, but this is how I would prefer the zone is marked out, right? And because of how I've marked it out, price could turn and leave you. But why? Because there's a lot of competition right here, right? So, but that's how I would play this game. I would play something like that. And this is really, by the way, for you guys, I'm not that keen to sell. I don't think the risk-reward ratio matches my risk appetite. I'm a 1:3 guy. From looking afar, I don't think I'm going to get that. But if you like 1:2, and if you think it's worth the risk, there you go. That's waiting for you, right? And if you're buying, same. So buy somewhere here and risk. But I'll reduce this area of value for buying a little bit. Make it a little bit neater. Remember, this buy here has got a lot of weekly demand support as well. right? But that's kind of like the area of values we're looking at on the dollar right now. And this is the short-term movement, mid-term movement is going to control the dollar. These two zones are going to control the dollar for the next week or two, maybe up until NFP, right, which is the first Friday of the next month. So if something drastic happens and price actually, without even taking a break, breaks through this demand, which is very possible, I tell you that. Remember, I'm just biased on a bullish dollar right now, but my governing time frame is in charge. Remember, once you have a governing supply in charge, price is really looking for its equal. Its evenly yoked equal is a governing demand, right? So the smart play, really, Leroy, and I'm talking to myself right now, the smart play is to hop onto this sell and to see if we can break this demand. That's the smart play. If I'm being 100% honest with you, that's the smart play. If I sell here, I would want to take profit down there. If I was to sell here, I would want to take profit down there on a weekly demand, even though the overall long-term target is somewhere there, meeting of this trend line with the governing demand, right? But this would be a better trade for me. So for the last time, I'm going to draw up two scenarios on this chart for you, and then we're gonna see what happens in the next week. So this is preferred. That's option one. Option two is sad, because if it just does this, then you have to wait for it to break, and then same thing, gonna come back down there. Or option three, which is from here, a bounce to there, and then there, without necessarily breaking. Option three is the one that breaks. I'm sorry, that's a miss, but that's just how I see price there. So that's the dollar index. Look out for that. I'm more interested only to sell up there if I'm pretty sure that price will think. And let's say, Leroy, what if we don't know if price is going to break the demand? How else can we know, Leroy, that price is going to break the demand? You need your CFTC data with you, right? That's why I taught you that stuff. That's why it's on the channel, right? You need to see, are these guys adding longs or adding supplies? The theme is there. We're at a supply. They're starting to take profits on the longs. Can you imagine how many buy orders were added on CFTC when this was happening? And then price hit a supply. Look at how many shorts they're adding week after week now. When you see that stuff, they don't even know what I'm talking about. I said compile your own CFTC. Maybe I'll take 3 days out of the week. I don't know when. I'll take 3 days out of the week. And in those 3 days, I'm going to compile one that I can share with you. The only CFTC spreadsheet that I have that's up to date, it's got a lot of private information on the floor, right? So there's CFTC. Oh, look, I'm on the dollar. All right, so this is as, hey, guys are lucky, man. Right, so let's go to the 4th of February. Look at this, dollar longs, 25,000 long orders. This is institutions, banks buying, and 10,000 shorts on the dollar, right, on the USD index. I've taught on this. If you're new to trading, don't worry. I've got a beautiful library of videos for you on the channel. Look for Master Trader Spreadsheet. It's there, right? And then go compile your own spreadsheet, right? So the 63% basically on longs, 26 on shorts. Let's remember this number, 25,203. 25,203. Let's change the date now. Let's go to the latest one, which is this last week, Friday or something. I don't know. When was the 11th of February? I'm making this recording on the 16th. That's the latest. They will always keep us a week behind. This was last week, Tuesday. So the week of Valentine's, but on the Tuesday. This was the latest. Their longs went up a little bit. They added an extra 1,000 longs, right, on the dollar, right? So 26, and they added just about 300 shorts on the dollar, just to keep things similar. Can you see that? They're maintaining a trend. They're not trying to break this up, right? So you bring this information and you keep studying it. Every week they update their positions. So this coming Tuesday, they're going to, by the time you watch this war room, if you watch it on Tuesday, the 18th, 19th of February, go check that website and see where they are with their longs. Because if they are holding a little bit for their longs, it gives me hope that we might even get this type of action first. And when price gets to that delicious supply, I'm interested in selling if I know this demand isn't going to get in the way. This is a nicer trade for me. All right, 365. I hope that helped. Right, next on the charts for me is AUDUSD. AUDUSD, right. So last time I was in this thing, I was selling, and then I can see I have some arrows here. So that means I've been watching the chart, but not yet active on the chart. I've been waiting to see clear buy signals. What's a clear buy signal in a chart, Leroy? Let's talk about that. Right, so let's go to the governing time frame. So we arrive at an area of value that we call a demand. That's tricky. Let's remove some stuff to make it readable. Right. Okay, let me just use another chart, then I'll come back to this one because there's so many things in there, and I just want to show you things nicely. Right. So this is AUDUSD on the governing time frame. AUDUSD. If you have 365, you know that this is a sell profile asset, which means most of the time the banks want to sell it. And if you know even more, you know that Australia is a massive exporter and importer of gold and all that kind of stuff with China, right? So it's a very big trading country. And so all these markets correlate for a reason. You'd know that the yellow is the main supply controlling things, and roughly speaking, the green is the demand, right? So this is the tennis court between up and down, up and down, up and down, right? And if we go to the 3 months time frame to get some refinery, 6 months, right? So this is what I mean by sell profile asset, right? You can see that this long wick from 2020 is price is trying to fill it. More importantly, look at this. This is a range. Then price is going down, so maybe we get a retest there. But these candlesticks are too big to read, but they do set the trend, right? So the 6 months presidential on the 3 months looks like this. Presidential is telling me that there's a bearish engulfing pattern out there that is looking lonely and looking for a kiss. Once we kiss that area of value, price falls. Now, this is the governing time frame on the monthly. Looking, all these terms are explained in my module 1. It's just that right now I have to fly. I've spent so much time just teaching you how to have a 10-year plan. So I really can't slow down now, right? Otherwise, the video is going to be 3 hours. All right, there we go. Weekly supply zone in there, beautiful imbalance. Another, I guess, PCP pattern in there. But before we move forward, let's fix our demand zone. It's still too big. Let's see if there's anything we can borrow from the left. Not much, eh? There's really not much we can do about it. Really not much we can do about it. Fine. Let's go to the weekly. Let's look to the left. Yay! Finally on the left, we've got some clarity of mind, right? So there's a majority demand here that's been holding price up and avoiding the AUD-USD from falling any further. The first time price made contact was in the October 2022. Price dug a little bit deeper, right, in February right now, but you can see mayoral demand is holding strong. If you've done my module 1, module 2 on your charts, you should have an arrow to remind you of glass effect, to remind you that you can break my heart the first time. I may forgive you. You may have made a mistake, but now trust is low. You break my heart one more time, which is the second time price returns there. Just know that the third time, I suspect it will be the end of the relationship. Translation, I suspect that if price was to come back into this area of value again, the weekly demand would break, right? So, but also fresh touch the first time price came all the way up here, all right? So that's a very good fresh touch. It gives us hope then that the retest will have some fuel. Because generally speaking for us, when we back tested the markets looking for that mature comprehension, we know that retests are stronger, right? So I'm not too worried about here, but price could stop there. Remember, it's a sell asset, but it'll be very nice now if price was to come all the way up there. So now I can do what? Adjust my governing supply. My governing supply is, and this is my weekly supply inside my governing supply. I'm looking for that, right? So that's what I'm seeing now. Now, what else could give me the balls to make a buy trade on AUD USD? Well, the fact that right now I know that the dollar, the second half of this USD has made contact with the supply, so it's weaker. Oh, I'm teaching, guys. I'm only going to get through one chart. No, man. This is not fair, comrades. Please do the course because I'm just teaching now. I need to go through 25 assets. I just can't help it, man, because I don't want to fly like people don't understand. Right? So this is what's going on here. Look at this. Beautiful. Right. So my trading chart now had a couple of things to confirm buy or sell. And this is what I was looking for. After explaining all of everything I've explained, This AUDUSD on the daily time frame. Look at this beautiful thing. So I waited for the first low, and I was like, okay, I'll mark you. My horizontal line is obviously linked to that weekly demand that's been holding price, right? There's a weekly demand that's been holding price that I showed you guys earlier on. And inside that weekly demand, I managed to then find a daily demand that was going to maintain value, right? So this smaller rectangle there is that daily demand. And then I am now looking for price to sweep liquidity. So price comes in, creates a low, and then price comes back to retest, sweeps any liquidity, and takes out a previous high. When you do this, you have my full attention. When you do this, you have my full attention as an asset. So I think markets are coming back here to the high 65 on Australian AUDUSD. And if I come to this particular chart that I like to use for trading, you know, this will be my first take profit. It'll be nice if price even goes higher up there, but this will be my first take. Now that I know that price wants to move. On the weekly time frame, it's my first take profit because it's a week, that side to side movement that I showed you. On the first chart, I said price is coming all the way up here, right? And this was my first sale. So I can now remove this and mark this up here. So yes, it'll be nice for price to come there, but I'm definitely happy to take profits here, or at least be cautious of this weekly supply. On the daily time frame, I'm looking for an entry, right? I'm looking for some pullback action. And you can tell that there's one there, you know, which is right around the corner. So that's what I'll be looking for this week or in the next 2 weeks to come. If price can come back into that zone here, very nice, I'll take that, right? So let's draw the zones properly and then move away from this asset. So obviously, for a swing trader like me, daily time frame is my friend. Cut out all the noise. I'm looking for a bounce back into the zone. I'm going to take the upper wick of the red candle because competition is real. And one thing that sucks is being left behind. Right, so my distal line or my stop loss, whatever you've been taught to call it, will be below there. And then I'm hoping to shred some profits when we get to this weekly supply zone and maybe hold 1 or 2 trades just in case we break out to the upside, because the real trade, the real money run is up there, but I cannot ignore a weekly supply, all this consolidation in that zone. Right, so that's AUDUSD, right? I really hope that makes sense. The next chart is EURUSD. EURUSD. No, you ain't going to talk to me like that. We're not going to. You remember I told you about EURUSD in April of 2024? But the problem is you don't subscribe to the channel, so you watch things and you forget and you don't get notified. I said in 2024, the end of that financial quarter, because remember, banks think in 3 months, January, February, March, quarter 1 was done. In April of 2024, I said I am going for EURUSD parity. And I explained what that means to you guys. And I said it's going to be my biggest lot size and my swing trade of the year. April 2025 is around the corner, which would mark 12 months of holding this trade. 12 months of when I gave the trade to you guys, right? When I literally asked you guys to start thinking about this, right? So it's not that I've been holding for 12 months, but I called it out in April 2024 that one day the markets are going to give us a clear signal, and I think it's going to work out to our advantage. What's parity, by the way? EURUSD parity is this, where a currency is 1:1. Can you see how close I was, bro? Can you see where price turned? And I still hope to pray there's a downside, but right now it's not happening because what? The dollar is now weak. So when the dollar started to become stronger and stronger and stronger, euro kept falling. This happens in September. There we go. September 2024. But I give you guys the signal in April 2024. Right? So look at this. Sell high, buy low. When I tell you guys this, markets all of a sudden, not because of what I said, I'm just saying coincidentally after April, markets went on a rampage looking for the best supply to push price down. Right, so I have you on the charts. Unfortunately, it looks like by the end of this week, I might have to close 80% of my open trades, just so I can retain profits, because I don't know how long this retracement is going to last. The retracement happening here is due to dollar weakness. So I don't know. I'm pretty sure all my stop loss are marked down here. I would love for price to automatically continue to the downside and hit my take profit. And maybe that's what's going to happen between now and April-ish, or even throughout the whole of 2025 to September. I don't know which year cycle this is in, right? But this is literally what's happening right now. EURUSD is punching up right now because the dollar is weak. Once the dollar is weak, risk-on assets thrive. That's why we saw on the tape that Nasdaq closed higher, etc., etc. This is what we mean. Right now, there's not much to do. Let's go to a EURUSD chart that does not have too many things on it. Then we can actually have an objective eye on the stuff. Whoop, whoop, whoop. Right. So this is EURUSD. Keep it simple. Governing time frame. We gotta play somewhere there. Keep it simple. Keep it very simple, Leroy. Keep it very simple. Right. There we go. Right. That's the relationship. That's all. Full stop. That's the story. In front of you, that's the story of the charts right now, right? So what's going on here? Price is either going to create an original turn, which is allowed. Banks are allowed to do that without our permission, without our consent. They can do that. And that's a base-in candle. Base-in candles, generally speaking, lead to reversing. Base-in candles lead to reversing. Base-in candles lead to reversing. Base-in candles lead to reversing, all right? Sometimes base-in candles lead to continuations, though, as well, okay? But the problem is the candle right next to it is green, right? So that's why I have that stop take area closing my cells, and then maybe we get another stab at this, right? So if price decides to rally upwards again on EURUSD on the governing time frame, it would mean that we're in time, or this is going to try and abuse for as long as it can the dollar weakness. Remember, there's always mayoral stuff to look out for. Weekly supplies are very notorious. They can easily influence you to get back in line. So price could be moving up here in a retracement, and check your governing timeframes. And as soon as the dollar is done retracing, price is now there. Price is now there on a weekly supply, and then boom, all of a sudden price is falling again. All right. So be careful. So I see short-term upward movement on the euro. But now, as a buyer, do you enter here because you're in a supply, right? As a buyer, I wouldn't do anything. So right now, for me, who's been in EURUSD for a very long time, I'm doing nothing. For you, you are looking to get into price. You really need to make a smart decision. One, you want to see Leroy get kicked out of his trades. So you want to see price, at least break this current supply. That's what I would suggest. Let's remove some of my drawings for now. All right, this is what I'm saying. You want to see price take me out here. So clean this out. I don't know if it's smart for you to sell here. I don't know. And the reason for that is already exhausted. And then there's also another full exhaustion in the supply zone. I really don't know. It's a little bit tricky, right? It's a little bit tricky. Now, because you haven't built your CFTC spreadsheet up to date, or you're waiting for someone to do it all for you, shame on you as a trader. You got to have your own stuff, man. It's a good habit. Know what's going on. But I can quickly tell you now, without showing you my spreadsheet for our corporate account, that if you look at the CFC data, it shows that banks are focused on shorts right now, right? And this was at least on the 4th of February, where they loaded another 221,000 shorts versus 162,000 longs. And their max shorts, historically speaking, the maximum number of sells and I really wish I could show you this stuff, right, has been 271,000 shorts. So there's still room for them to keep selling, all right? And right now, price is edging up a bit. So I am holding a little bit for my USD parity. What I can do is maybe show you, because the stuff that I just read for you was my analysis for corporate accounts as of the 4th. I normally update our investors once every 2 weeks, give or take. Right, so look at this. So this is the dollar, though. Let's find EURUSD. Where are you? Here I am. Okay, this is taking forever. Let's come here. Honestly, this is gonna take time, guys. It's gonna take time. Look, please update your thing, or maybe I should come back to you guys one day and show you um 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 show you how to do it again or something like that, right? But this go back to the fourth. So you remember the stuff I said earlier on, right? Shorts where they literally added 221,000 221,000 shorts, right? And look at their longs. Their longs are 162. So there's clearly more shorts than longs, right? But now, so the latest one we have was this Tuesday, right? There we go, on the 11th. So you can see now the relationship. Look at that. They added a little bit more. They added more shorts to the chart. They added more. They added more. They didn't take out less. They added more. They didn't take out less, right? So there's really slightly in the markets more selling than buying on Euro USD from the bank's perspective. And this Tuesday, we'll then really see the up-to-date CFTC to see what to do, right? So, taking a sell at that area of value, and that's why it's important to have this data with you, is risky business, right? It could work, it could backfire. But personally, for someone who's in these trades, I really hope it pushes price down, personally speaking. But yeah, if we're to buy up and you really want to buy up a little bit right now because of the governing blah, 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 and what I showed you earlier on, then you really have to wait for the zone to break and then wait for retracement to the downside. And then you can get a clear buy area. And I would wait for something here. I would wait for something down here on the H4. Because on the daily, it doesn't seem like price wants to be your friend on the daily time frame, right? But whatever happens is if price goes down, Leroy is happy, all right? Just that I don't like the exhaustion into the zone. However, if we were to make the argument that Leroy, this is not the module one imbalance that you taught us, yes, but this is a very big candle. So that by itself counts sometimes as an imbalance. But if we're to do something like this, one, and then reduce the zone here and draw it like that, or like that, two, then technically speaking, this is a new supply and price is coming for a fresh touch and we can expect price to go down and then wobble into that H4 area and then we can expect price to bounce back up and then come into this zone later on for a retest where we can really expect to see a push down. But this is going to be if the banks are piling into more shorts right now. And the window to pile into shorts is happening right now as they accumulate sell positions while the dollar is weak. So be very careful of that. They're accumulating sell positions while the dollar is weak. Because one day when the dollar comes back strong, these sells are going to rip it and we're going to go into USD parity. Right. Pound USD, look at a pound USD as quickly as possible. Longs are hot, but generally direction for longs are getting lower and lower. All right. Lower and lower. But if you look at CFTC, they've done, they're starting to run out of steam. Right. The governing time frame, I was in a pound USD sell, but just to balance my exposure in the market because I was also holding Euro USD, I took profit on this beautiful trade not a long time, about a week ago. If I'm not mistaken, roughly about a week and a half ago, just towards end of Jan, towards Feb, etc. Right, and rightfully so. Immediately, you can see there's a governing demand, price went into a governing demand, although it's the second time. Demand one, demand two, demand three. So price might be pushing up, right? So I'm now waiting on pound USD. This gray area is because there's a weekly supply, which I'm praying that the pound ignores, or rather breaks through into somewhat of a daily supply, right? So if we can break this area and come up here, that would be much better. And CFTC, it was hot on longs, and now slowly but surely they keep reducing, right? Keep reducing their longs. So I'm looking for more sells, but I just need more time. Again, this is in line with the dollar being temporarily weak to allow these assets to run higher for a higher sell. So selling here is cowboy zone. I would not sell here if I were you. I would wait for price to come up here. And then if you are not a cowboy, but maybe you like cattle, you're a cattle rancher. Cowboy means very risky. I would maybe wait for a pullback into this zone. I'm not really a buyer in the pound. I'm just waiting to sell, right? And then wait for something like that, right? So, cowboys and cowgirls, good luck for you. And cattle ranchers, right? But high risk selling in this zone, there's potential that price could sell. But the better sell is up there, which means anyone who sells in here is in trouble or is at risk of being pounded upon, right? So next one is gold. I wish I'd done gold analysis with you guys 3 weeks ago. Man, would have had fun making money together. And we did something cool on the trading floor with gold, right? We were actually able to map out. So we calculated in general how many CFTC orders were left on longs on gold to reach max position, max longs on the chart, which is normally 408,000 longs, right? Okay, let me explain this properly. On your spreadsheet, you must be keeping track of the maximum longs they've ever done and have it somewhere up there, like I told you a long time ago. Now, the max longs on gold is 408,000 longs. That's the maximum, which means anytime the longs get closer and closer to that number, we know that the banks are about to take profit. When banks take profits, price drops, right? So let me show you what I mean. And you're not going to see it nicely because, again, I'm not showing you the spreadsheet brew, but you should have your own spreadsheet brew because it's very, very, very important. Very, very important for you, right? Let's find gold quickly. Oh, no. Why does this look like the futures market? Did I go into the futures market? Let's go. Where's my gold? Agriculture, petroleum, natural gas. The gold. Okay, I'll say it again for the people at the back. The maximum longs historically for gold is 408,000 longs. So the closer you get to that number, be careful. They have to take profit off their longs. So last week, or last of last week, the COT institutions showed that the institutions were at 356,000 longs, which meant that there were about 50,000 or so plus minus orders left that price could still push up. And then the following week, which was this last Tuesday, from 356, they've reduced a little bit, I see, to 343. And I'm saying when you watch this video of the War Room, check COT for Tuesday, the 18, 19, whatever the date will be, to see whether this number is bigger or smaller. But you can see with the slight reduction to their longs, all right, reducing it by 12,000 orders and adding 5,000 sell orders, they are starting to slowly but surely take profit on gold, right? They're starting to surely take profit on gold. And that's interesting because that means that they might be slightly done or getting ready to be done with pushing gold prices up. And that's really how you trade supply and demand with institutional order flow, right? So I hate the fact that I got out of gold a long time ago on, give or take, as soon as February started, I took profit, saw a red day coming. I was like, nah, we good. Because remember, you're an all-time high. Every time gold breaks a previous high, you're an all-time high. There's no left. There's no look left. There's no supply. You don't know where they're going to stop, right? So I thought, fair enough. I mean, come on, guys. This is not bad. Looking at charts and randomly guessing that the institutions are going to make it up here and then price stops 60 points off my target. That's incredible prediction, bro. Right. So anyways, on Friday, we ended with the bearish engulfing pattern. Ding, 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 ding. We see that there's a reduction in sell orders, right? So, it's risky. It's risky, but there might be a sell opportunity on gold right now. I'm not looking to do much on gold until I get a much more clearer signal for me. But yeah, you're looking at something like that. I would think for now, and the dollar is cooling off, so your safe haven flows are cooling off, and maybe markets are slowly but surely starting to adjust to Trump. Maybe markets are surely just on the we now know what it's about, right? But what I would suggest you do with gold is you look for anti, right? So we know for a fact we've got a bearish engulfing pattern. We know that price might want to retest that. That's something to keep in mind. We know that there was a bigger order. There's about 50,000 longs that they could use to reach max profit. And that's the only worry I have in selling here is because I know that there are some longs that they could use to push price up to clean up this area. Because we put our stop losses here, we're now in a dangerous liquidity range, right? So it's a risk that you have to accept if you're a seller, right? But the next thing that we would make us better is if we were to draw a fib from bottom to up, because we're very bullish on gold for a while. So it will be a bullish Fibonacci, maybe to see if this is a retracement zone, right? And you can see 50% would put us loggerheads with this bottom wick here, and the golden ratio would put us there, with which is what I'm sure is a 50% body candle, which is part of our CP, right? It is definitely a 50% body candle. So that's a continuation pattern right there, and then, I would not be surprised if price decided to explode forward. I really would not be surprised if price started to explode forward, just as a retracement from here, and then trying to push back up to our original target. So I'll leave this here for you guys. I don't know yet if I'm fully committed to doing anything on gold. I'll only know on Tuesday. On Tuesday, I'll be looking at the CFTC latest data, but we won't be together because this war room would have already dropped. But I've already empowered you with the information you need, right? So price could stop here, do this, come there, and come there. So you could take that trade down, all right? But, for me, the better trade would be hopefully to go up as well, right? Or both trades play out, right? So we'll see, what type of a miss, happens here on gold. Okay, that's gold done. Oil is quite chilled. The last I looked, not much focus on short positions on oil, but also buying wasn't that strong on oil, right? So, and I'm talking about CFTC. When I say that, I'm saying they're not really changing much in their longs or shorts positions, right, in the data wise, right? But if you look at the charts, a new governing supply has been formed as price was leaving a previous supply from a previous supply. So that is happening. And this definitely has to be linked to whatever is going on with Canada and tariffs, because Canada is a massive oil based economy, right? So a bearish engulfing pattern is not too shocking. On the weekly time frame, very clean touch of my order blocks. This I wish I was in. I mean, it's not even marked. So I might have marked the zone, all right, like I did clearly here, but I just never came back to that. So even I make these mistakes sometimes where you use your analysis properly, but you forget to set a pending order, right? So this was a simple mistake of forgetting to come back and set the pending order. So at the time price came here, it triggered a beautiful trade idea that I clearly had, but just wasn't present for, right? If I was in this trade, I would have clearly marked my profit and loss, but I'm not, right? So that's beautiful on the daily time frame. Going back to weekly, I can see that we're about to make contact with some weekly demands. Some weekly lows have been scraped, so we're really playing dirty down here. So oil is probably another chart I really don't have interest in trading right now. Oil is probably another chart I don't care to trade. I really wanted to be in the sell. Right now, I'm very unclear on the buy. USDJPY is the next one. I'm just trying to get through just so that you guys get a handful of assets. I am a bit low energy now because I've been talking for a while. But I hope this has been very helpful. I really do hope this has been helpful. Unfortunately, I'm not going to get through all the assets I wanted to get through today. USDJPY is our money maker chart. This chart just makes sense, bro. This chart is just beautiful. It's a beautiful supply and demand. Governing demand makes contact with the governing demand, creates another governing demand. And then price makes a governing demand, then price in a governing demand. And price comes from a governing supply. And then you go to the weekly time frame, and the same thing is played out, right, into the area of value, into a weekly demand. And that's where we are now. I was a seller in this particular market recently, but really just been buying a lot of USDJPY in the last year or so. Right now, I'm not a buyer in this particular market. And it's only because, again, the dollar is weak, right? So what I should have done is found a way to sell somewhere in here, and I missed that opportunity. So now we wait. So let's create one for ourselves. This is very pretty. H4 is very, very, very pretty. H4 broke into a supply. H4 broke into a supply. So technically speaking, on the H4 time frame, there is no a next supply than the one that was used to break a supply. And breaking a supply is generally dangerous in our field because it might be hinting into a move to the upside. You might be clearing space, but it is a much more smaller time frame. So I'll trade the supply with a lot of caution. How to avoid being stopped out? Number one, make sure price comes back here with clear distribution. What does that mean? Let price trade side to side first before making contact. If price does not have a clear distribution and comes back in a V-shaped recovery, so very little side to side like this, then there's a high chance that the buying orders down there are more than the selling orders up here, and price is going to push through to the upside. So that's the stuff you want to look out for in USDJPY. But overall, USDJPY, banks have been very focused on selling it. You can see very, very focused on selling it. This is at the beginning of the year. They started piling up orders, all right? That's clear as day. So they've been very, very aggressive shorts. And if you look at the CFTC data, you'll see that shorts were much more higher, right? Now, max shorts, and I really wish you could see this. Max shorts, the maximum sales that bank orders have for USDJPY are 105,000. Maybe let me show you this thing. 105,000, right? So that's like when they're literally at their maximum, when they are not behaving. They're at 105,000. The COT, are you with me? USDJPY, where are you now? Japanese yen, I need you. And there's another place to go where this stuff is more organized, but this is just the closest bookmark I have. So you're going to have to bear with me. Even this website, sometimes it takes forever for me to learn it. I like where I get my stuff, but then there we go. That's the yen, that's the indices. It's taking time to find it. And I am scrolling quite fast. I'm so worried about time. And I got someone commented on my videos the other time, was like, look, man, don't worry about time. We are learning a lot, so it's okay, take your time. And I really appreciate that. I just worry about the people who do complain as well. But maybe I should just do me and know that I taught properly versus and the other thing is also, it's like, it sucks to talk for 2 hours and then YouTube tells you that people only watch the first 30 minutes. Like, okay, well, I'm not an entertainer, so it's really not my job to keep your focus. I'm generally just trying to put food on your table. But I didn't know I had to perform in a specific way, right? The algorithm sucks, man. The stuff that it makes you have to do to gain attention, hold attention, it's beyond the stuff that I think I have time to do. So you guys subscribing, liking, and watching is really such a big help to me. It lets me know, right? I'm not finding this thing here for you. If I find it in the edits, I'll insert it, right? If I remember. But just know that, and if I don't remember, it means I just didn't remember, and I apologize. But trust my word, maximum shorts for USDJPY is about 105,000, right? Meaning, once they get to 104, 105 in their selling, right, that's when they start to take profits and you start to see a reversal. As of the 4th of February, when the 4th of February CFTC data started in USD, they were on 104. They were already very close to their maximum shorts. So if you come here to the weekly, let's go to the daily. So if you find the 4th of February where they dropped that data, that's not when they made it, somewhere here, 4th of February. Where we start to see right there. Yeah, see there? This is the 3rd, and then this is the 4th of February, somewhere there. They take out their final demand and drive price into a weekly demand. When price gets to a weekly demand, they've already started taking profit. So obviously we get this long explosion to the upside, right? And generally speaking, when they get to their max positions, they take profits. You got to take profits at some point. Once you take profits, price will inversely go the other way. So the question now is, how long will this last? Will price continue falling? We'll know with the CFTs that's going to drop this coming Tuesday, right? So surprisingly enough, I've spoken for so long, but I've only looked at the dollar, AUD USD, Euro USD, Pound USD, the gold, the oil, USDJPY, which forces me to want to release another war room this week, man. When are we going to get through all the other good stuff, right? We've got AUD, USD, AUD, Swiss franc. We've got so many currencies I want to, to talk to you guys about, but I just couldn't do it. So brace yourselves this coming week. if I see that the week is quiet and there's not much volatility, I promise to drop a war room with every single other currency and no long intros, just straight to business, because I feel like I've prepped you for the market. I feel like I've really done my job in making sure that you're secure in how to move forward financially for yourself, how to move forward in this particular market, in this industry. Please do not, for any reason, forget to like and subscribe. This is our YouTube channel. War Room 94 is already out, where I looked at dollar, currency, and indices, crypto, video. 365 Think, Trade, Invest, and Grow episode 1 is out. There'll be episode 2 this week. There'll be this War Room this week. So it's going to get a lot. And, the content is long. So give yourself a chance to digest it. 365, shake my hand. If you made it to the end, please let me know in the comment section, and I will do my best to do something nice for you, all right? If you made it to the end of the video, please let me know in the comment section. I'm just thinking what I can do. I'm just thinking, while I think, just hold on before you end the video. Currency wars book. Let's see something. If you made it to the end of the book, of 365, yeah, look, let me know, and I'll think hard to kind of like let you know. I'll buy you guys a very specific book. I'm going to buy you guys the book of the year, right? There's a book of the year that I really need to find and see how much it is on Kindle. And normally I offer the first 100 people something like that. So the first, whoever says they made it to the end, please don't leave your email address on the YouTube comment. I don't know what those weird people will do with it, but just say I made it to the end, and then I'll find a way to reach you, contact you, or I'll put like a link or something under your comment where you can just quickly give me your email address in a secure way, and I'll buy you an ebook on, I think, the most potent book of the year to better understand what the markets are doing, or at least to give you the type of framework. Shake my hand one more time. Thank you so much for watching. Take care. Bye.